Hmm. Okay. Major portion I will cover in English. Okay. Not in English only, but major portion will be in English. Presentation itself is in English. Okay. Don't worry, don't worry. So friends, this is liability insurance today. Now liability, this is perhaps the first session of the liability insurance, so I'll have to pay more attention to it. सभी ध्यान से सुने और सारे वर्ड्स को मीनिंग समझें. Basically today it was the training session of CGL, but if I am taking CGL first, then you won't be able to understand what is liability. So it is always better to take liability first, then CGL. Tomorrow we will take CGL, commercial general liability, and today we will cover up liability insurance. Now try to understand what is liability. In a very simple word, liability means the responsibility one person has towards another in the society. That's all. No complication, no confusion, no hassle of words. In simple terms, responsibility of a person towards another person in the society. That is liability. Now how liability, how responsibility arises? I am responsible for you, you are responsible for me, because we are part of the society. But how this responsibility arises? कैसे ये responsible हुए हम एक दूसरे के लिए? By virtue of law or statutes. Rights demand responsibilities too. If I have a right, you also have a right. Both have the rights, so both are responsible. Awareness about rights. My right is that you will not disturb my peace, my family, myself. You will not cause me any injury. You will not cause me, no, you will not hurt me. This is awareness about our rights. So as the society progresses, litigation increases. If we are not taking care of our responsibilities, society is progressing. There is a differentiation or gap between the poor and riches. So a lot of disputes arises, and those disputes are converted into litigations. So the liability means responsibility of one person towards another. It could be by virtue of law, by rights, by awareness, and by societal progression. Now this liability becomes legal liability. And what is this legal liability? Legal liability means legal plus responsibility. Now you will say, what does it mean? Legal plus responsibility means responsibility imposed by any law. So the legal responsibility to pay for the damages resulted. If you are causing me any harm, any injury, any property loss, you become legally responsible. Not only responsible, legally responsible, because there is a law which is protecting me. There is a law which is giving me certain rights. So it becomes legal liability. So legal liability means legal responsibility. Now liability insurance has certain core ingredients. What these core ingredients are? There has to be a mistake, or negligence, or inappropriate actions. If a person is causing a mistake and harming anyone, or because of his negligence, or because of his inappropriate action, doing any sort of physical damage, property damage, then he is responsible, or he is liable for his action. loss because of the mistake. That mistake is resulting into loss. What kind of loss? Bodily injury, property damage, financial loss. In simple terms, you will say a mistake cannot result into bodily injury or property damage. But mistake could be of any nature. Mistake could be grievous, mistake could be serious, mistake could be of a criminal nature even. So the financial losses could be there, bodily injury could be there, property damage could be there. Now a third party claim for the loss within the policy period. If a person is doing mistake or causing any bodily injury or property damage or financial loss, then there is a third party claim for that loss. If the policy is continuing within that policy period, that person will claim the compensation. Because this is a legal liability. Legal liability for any individual, any firm, any corporate, even the general public, you and me also are responsible and legally liable for each other. This is the system. So this we cannot avoid. If it is resulting into bodily injury, property damage and financial loss, the person will definitely claim from the wrongdoer, from the person who is causing this kind of losses. So not only the mistake, not only the negligence or not only the inappropriate actions, this result of the bodily injury or property damage or financial loss is a legal right of each and every person. For that, the person has got a right to claim by virtue of law, by virtue of act in any of the court of law, means concerning court of law. Now, what is this liability segment? See, liability is a big segment of general insurance portfolio. Non-life insurance or general insurance has many big portfolios like fire, motor, health, engineering, liability and other miscellaneous. So liability is a big segment. Big in the sense it has got plenty of policies, number of policies. And these number of policies are divided into two sections. All the general insurance companies are having various policies of liability segment. All. But these liability policies are divided into two sections. One is casualty lines, other is financial lines. Policies belonging to casualty line are protecting third party bodily injury and property damage claims. I repeat, policies belonging to casualty lines are protecting or providing third party bodily injury and property damage claims. Now the question is, what are the policies under this section? The casualty lines includes public liability insurance. Public liability insurance is again divided into two sections. Public liability industrial risk, public liability non-industrial risk. Then commercial general liability, what we call CGL insurance. Then product liability. These are the policies which are paying for the bodily injury and property damage claim if caused by any person. So any individual, any firm, any corporate can take these policies because these liabilities are decided as per the act. Compensation could be very heavy and the compensation will go to the third person. If the insurance is not there, the firms have to pay out of the pocket. So that would be a very heavy burden. So naturally the firms are doing, they are taking public liability insurance, either it's an industrial firm or non-industrial firms. The difference of industrial firms and non-industrial firms is, industrial firm is producing or manufacturing some kind of product, that is output, turnover, and non-industrial unit is providing some kind of service like hospital, restaurants. They are providing services, but both are industrial. Industrial and non-industrial means public liability section will cover the bodily injury and property damage claims of these sections. So this is first line, called casualty line. Second one is financial line. Now financial line include those policies which are paying for the third party financial losses. There are certain reasons which are resulting into the financial losses. And those financial losses are caused by the actions or deeds of those persons. So normally this kind of section is including the policies like professional indemnity for doctors, professional indemnity for hospitals, director and officers liability, cyber crime liability, like that. These are the policies which are always resulting into the financial losses to any person. And these financial losses could be very high. At times, if it is decided by the court of law, the liability could be very high with interest. So that compensation has to be paid under these policies. If the insurance policy is there, insured is very well protected because on his behalf, the insurance company will pay the compensation. Obviously, the professional indemnity policy is taken by the doctors, professional chartered accountants, engineers, etc. Director and officers is a popular product for all corporates. Cyber is a newly popular product because cyber crimes are continuously taking place. So these are the two sections where all the liability segments are included. But in these two sections, almost all liability policies are covered. Now, basics of liability insurance and concepts. The concept of AOA and AOY. Wherever you are listening the word liability insurance, that means you will also listen AOA and AOY. Reason being, in all the liability insurance policies, this sum insured, the limit of indemnity or the limit of liability is decided on the basis of AOA and AOY. Now, what is this AOA and AOY? These are synonyms: limit of liability, limit of indemnity, and sum insured. These are all three terms used in the same sense. They are no difference. But AOA and AOY are different. AOA stands for any 1 year, any one accident. AOY stands for any 1 year. Now AOY means what? AOY means aggregate liability, total limits. Means maximum liability of the insurer for all claims arising out of all accidents during the policy period. Policy period is 1 year. So any 1 year, what maximum amount insurance company will pay in case of number of incidents or accidents, that limit is decided under the AOY category. Then what is AOA? This is any one accident. Means each occurrence per claim limit. If an incident is happening, what is the maximum liability of the insurance company for all claims arising out of a single accident? In a single accident, the liability of insurance company will not be exceeded. It will remain maximum as AOA limit. But there are four prevalent ratios. Four prevalent ratios. And these ratios are known as 1 is equal to 1, 1 is equal to 2, 1 is equal to 3, 1 is equal to 4. This is the option of the insured. इंश्योर्ड इनमें से कोई सा भी ऑप्शन सेलेक्ट कर सकता है. रीजन बीइंग दिस इज डिवाइडिंग द लायबिलिटी. सपोज मैंने एक एक्सीडेंट के लिए 1 इज इक्वल टू 1 सेलेक्ट कर लिया. नाउ दिस 1 इज इक्वल टू 1 स्टैंड्स फॉर सपोज माई सम इंश्योर्ड इज 1 करोड़. So the maximum liability of insurance company is 1 crore, either there is a single accident or 1 crore, maybe there are 3 accidents in a year. The liability limit will not exceed that more than 1 crore. But if it is 1 is equal to 3 or 1 is equal to 4, the any one accident limit will be lower, any one year limit will be higher. Say suppose 1 is equal to 4 is I have opted. And there is a loss of 30 lakh in a policy. My AOA, anyone accident limit is 50 lakh. And total sum insured is 2 crore. 50 into 1 is equal to 4 means 2 crore. Now if there is a single claim of 30 lakhs, insurance company will pay it under the AOA because the maximum AOA limit is 50 lakh. Easily. But if this any one accident is of 70 lakh and my any one accident limit is only 50 lakh, insurance company will not pay more than 50 lakh. Though the any one year limit is 2 crore. But for one incident, maximum payable is 50 lakh. So that is the way prevalent ratios are decided. This is the choice of the insured to select any of these four. There is no fifth one, no sixth one. Only these four ratios are prevalent in all the general insurance companies and all the liability insurance policies. And this is hard and fast. These cannot be changed. Now the question is what these ratios are. These ratios represents amounts, not number of times of accidents. I repeat, these ratios represents amounts. I gave you just an example. If claim is 30 lakh, that is the amount. It is paid because the limit is 50 lakh, any one accident. If amount is 70 lakh, claim will be paid, but for the 50 lakh rupees only. So these ratios represents amounts, not the number of times of accidents. So this is the concept of AOA and AOY, which is applicable to all the liability insurance policies of all the general insurance companies of India and even international, globally. Now basics of liability insurance and concepts. See this example. AOA and AOY. Example, insured has selected 1 is equal to 2. His any one accident limit is 50 lakh. And any one year limit is 1 crore, 100 lakhs. Because it is 1 is equal to 2. Now situation 1. 3 claims of INR 30 lakh each. All claims are payable subject to deductibles. Because maximum limit is 50 lakh. If the claim is of 30 lakh rupees, insurance company will pay it. Number is not important, amount is important. Because this ratio is representing amount. There could be 1 incident, there could be 4 incidents. So if the amount is 30 lakh rupees and any one accident limit is 50 lakh rupees, insurance company will pay it. Second claim also will pay it. Third claim will also pay it. Up to 100 lakhs, insurance company will pay. Now situation second. 4 claims of INR 30 lakhs and each 3 claims are fully payable, subject to deductibles. 3 claims are payable because 30, 30, 30. 90 lakhs are paid. Now in fourth claim of 30 lakh rupees, what is the sum insured left? Only 100 lakhs. So that will be paid only until AOY exhausts. Means until any 1 year limit exhausts. So that will not be paid in full. Third situation. One claim of INR 75 lakhs. The claim is payable only to the limit of rupees 50 lakh. Because any one accident limit is only 50 lakh, subject to deductibles. If 2 claims of 75 lakh rupees are there, both the claims will be paid for 50 lakh rupees. If 3 claims of 75 lakhs are there, first claim will be paid for 50 lakh, second claim will also be paid for 50 lakh, third claim will not be paid because the sum insured is exhausted. So this is the concept which is explained with complete clarity, and I think you have better understood it. Now, basic of liability insurance and concepts. Deductibles means compulsory access as per the policy clause. Say for example, claim amount is rupees 50 lakh. As per policy, deductible applicable is 10 lakh rupees. That means insurance company will pay 40 lakh rupees only. Because that deductible is as per the policy. Even if it is challenged before the court of law, still company has got a right. Because deductible is mentioned on the policy itself, and policy is a contract of insurance. And the deductible limit is higher in liability insurance. So this is simple method of payment. Another term is territory. This territory in liability is very important term. Why? Territory means geographical region within which the claim incident must occur. We are giving a liability insurance policy to you. Our territory is India. Geographical region is India. If there is any incident within India, claim is payable. If it is beyond, not even through court, it won't be paid. So that is the geographical region. Second case, jurisdiction. What is jurisdiction? Jurisdiction means geographical region where a claim can be filed in the court. The territory is India, jurisdiction will also be India. And any court of law where the incident took place, the case can be filed. Now, options available for territory and jurisdictions with insurance companies. According to the individual proposals or merits of the case. What options are available? Insurance company can give territory as India. Insurance company on requirement can give as worldwide cover. Not preferable by SGI. SGI is not giving worldwide cover. And third option is worldwide excluding US and Canada. Worldwide coverage is provided, but the liability related to the US and Canada will not be covered. So these are the 3 options available with the insurance companies as per the requirement of the insured. Any option can be considered, but in SGI we are not considering worldwide coverage. Now, basic of liability insurance and concepts. See with an example how the territory and jurisdiction works. Example. A tourist comes to India and a claim incident occurs here in the Indian territory. Later he goes back to USA, means the man was from USA, and files a claim against the insured in USA. A person from USA came, I did some act which caused him bodily injury and some property loss. He did nothing here. When he went back to USA, he filed a case against me. Now the question is, what will be the situation? Now, territory is India, jurisdiction is India, claim payable law. If I have taken a policy of public liability, even if there is a court case against me in USA court, my policy or my insurer will not pay. Because they will say, we have given you a policy of public liability where the territory is India, jurisdiction is India. You will not pay anything. Okay, simple. Now suppose in my policy, I have taken the insurance policy from any other company who have provided me the worldwide coverage. In that case, incident took place in India. Territory is India. Jurisdiction is worldwide. Here the territory is also worldwide. Because I have taken the worldwide coverage. And that policy claim will be paid. Third situation. If territory is India and jurisdiction is worldwide, that is again optional, because if the insurance required worldwide coverage, then only the insurance company will give. In that case, this claim is payable. And in fourth situation, if territory is India and coverage is worldwide excluding USA and Canada, actually the claim will not be paid. Why? Because the man is from USA. And USA and Canada are excluded. So this is the simple concept how the territory and jurisdiction will work. Now certain other important things. There are different periods, and these periods are very important. One is insurance period. Insurance period means, see, the words are resembling. एक जैसे लगते हैं वर्ड सुनने में, लेकिन मतलब सबके अलग अलग है. इंश्योरेंस पीरियड, पॉलिसी पीरियड, रेट्रोएक्टिव पीरियड. अब इनके मीनिंग जब तक आपकी समझ में नहीं आएंगे आप समझ नहीं पाएंगे. तो एक एक की डेफिनेशन समझिए. इंश्योरेंस पीरियड मीन्स पीरियड फ्रॉम पॉलिसी इंसेप्शन डेट of the first policy to policy expiry date to current policy, provided the coverage is uninterrupted. एक एग्जांपल से समझाता हूँ. मैं अपने लिए पब्लिक लायबिलिटी की पॉलिसी ले रहा हूँ 2020 से. I purchased first public liability insurance policy in 2020. I continued to renew it in 2021, 2022, 2023 and 2024. So my insurance period starts from 2020. Period from policy inception date. Inception is in 2020. When I took the first policy, without any break, without any interruption, continuously renewed. This is called insurance period. Now there is policy period. Policy period simple, 12 महीने का होता है. If this policy I have taken in 24, or 1st January 24 to 31st December, that will expire. So policy period is for 12 months, 1 year. Now retroactive date. Retroactive date means previous date when the loss took place. Not on current policy, previous policies. The date at which the insured took the policy for the first time and has been continuously covered. This is also the beginning date of the insurance period and claims made policy. Loss took place suppose in 2023. That time I didn't came to know. But if I came to know today also, I can file the claim because the insurance period is covered. That date will become the retroactive date. One more aspect, extended reporting period or discovery period. In liability insurance policies, general insurance companies are providing if the cover is discontinued, then this will not be there. The insured can report claims arising from acts committed within policy period. But if the policy continued, insurance company can provide an extended period of 30 days. Say for example, ABC Limited has been buying policy incepting January 1, 2010 for the last 3 years without a break with the extended reporting period of 30 days. So the 30-day period is given extra by the insurance company. His policy expires on 31st December. He doesn't buy a policy thereafter. But a claim is reported on January 15, 2011 is also payable because policy has a 30 days extended reporting period. The claim is payable. So this is for the future. Retroactive date is for the past. Insurance period is from the past date, first date. Policy period is for the current 12 months. These are the 4 important aspects. Say this is insurance period. Continuously when your policy is continuing, this retro period is covered, this policy period is covered, this discovery period is also covered. Now basics of liability insurance and concepts. Claim made and reported. What is this? Claim made policy. See an example. Loss occurring during period of insurance. But claim being first made during the policy period are covered. Say suppose loss occurred on May 5, 2009. Good. Claim first reported on May 10, 2010. After 1 year. Now retroactive date starts from January 1, 2009 because this policy was from January 1, 2009. Policy renewed on January 1, 2010. Policy expired on December 31st, 2010. So this is a policy period, but this is a period of insurance. Period of insurance starts from 2009 to 2010, 31st December. Policy period starts from January 1, 2010 to December 31st, 2010. Policy period is always of 12 months. This is short, renewable every year. Insurance period is from the first date. So the claim is paid. Occurrence based. Loss occurring during policy period. Claims reported within the policy period or thereafter any time in future are covered. How? This is another example. Say loss occurred on May 5, 2010. But it was reported after 1 year. May 10, 2011. Policy starts from January 1, 2010 and expires on 31st December 2010. This is policy period. So here again the claim is payable. How? Because this is in the policy period itself. May 5, 2010. So policy is covering this. Claim is paid. Now available liability products with SGI. Professional indemnity insurance for doctors, errors and omissions for medical establishment, professional indemnity insurance for engineers, architects and interior decorators, Professional indemnity for chartered accountants, financial accountants, and management consultants. Professional indemnity for lawyers, advocates, solicitors, and counsels. Then Public Liability Insurance Act only. Public Liability Insurance Industrial. Public Liability Insurance Non-Industrial. Product Liability Insurance. Commercial General Liability Insurance. Employer's Liability or Workman Compensation Insurance. And Carrier's Legal Liability Insurance. Now see the applicability of SGI products. This is relevant. Say, bodily injury or property damage or financial loss caused by product defect. Example, accident due to a faulty tire killing. Accident due to a faulty tire killing the driver. Means tire was faulty. Because of that the driver killed. Since the tire was faulty, it is a product defect. So the liability is covered under the product liability and CGL insurance. CGL also include product liability. Another, bodily injury or property damage or financial loss is caused by operations. Guest slips on wet floor in hotel and breaks his leg. Now this is covered under the public liability and CGL. Because this is public liability and CGL also includes public liability. Design defect construction. Building structure collapse because of the design defect. Now this design defect is by the professional. Who is the professional? Builder or engineer or constructor. So if they have taken a professional indemnity policy, it is covered under that because this is causing financial loss that will be paid. Now leakage of poisonous gas or hazardous goods. This is called death of people in surroundings. So because of that, people died. This liability is covered under the Public Liability Insurance Act or CGL. Wrong treatment by a doctor. Wrong treatment by doctor lead to the death of a patient. Which policy will cover it? Professional indemnity for doctors. Or if given to the hospital, then the professional indemnity policy for the hospitals under medical establishment. So that is the way the liability is separated according to the policies. Which liability will cover under which policy? A very famous example you must be knowing. The Bhopal gas tragedy. Those who are less than 40 years, they may not be knowing. Because this took place 40 years ago. That is 2nd and 3rd December 1984. There was a company called Union Carbide in India Limited. That was a pesticide plant in Bhopal, Madhya Pradesh. There, the methyl isocyanate gas leaked in the night. And over 5 lakh people were exposed to it. Lakhs of people died. Remaining suffered injuries or still they are suffering. So that was the biggest tragedy in India suffered so far. This liability is covered under the Public Liability Act 1991. Thereafter only this act came into force. After this incident, because this incident took place in 1984. Public Liability Act came in 1991. So this provides immediate relief to the persons affected by accidents occurring while handling any hazardous substance and for matters connected therewith or incident thereto. So this is a public policy. This came after it. Now who needs a policy? all those entities who are dealing in manufacturing, processing, treatment, packaging, storage, transportation of hazardous material can be approached for PL Act policy. PL Act means Public Liability Act policy. Limit of policy, 1 is equal to 1, 1 is equal to 2, 1 is equal to 3, 1 is equal to 4, as per the choice of the insured. Maximum as per the underwriter's policy. Premium based on turnover, paid up capital, limit of indemnity and group of substance. Composition of premium, risk premium plus environmental relief fund amount plus tax. So this is the provision of compensation as per Act. This amount is very meager, but the Act is very old. This limit is not revised so far. Death fatal 25,000 and 12,500. Injury 12,500. Property damage 6,000. But now, considering the current aspect, the courts are revising the limits and increasing the awards also. So this is about the public liability insurance. Now if you have any questions, you can ask me. This was our first lecture, but I think I have simplified lot many things. The basic concepts must be clear in your mind now. The lecture will continue on CGL, Commercial General Liability, tomorrow. That's the wider policy. Here again, all these things will be part of that policy. Any questions from anyone? You can just check up your mail IDs. A simple test paper is there on your mail ID. Anybody can confirm.